So as the industry becomes more institutionalized, it should be safer. We should get a lot less of these negative headlines. Hopefully, we get some regulatory clarity in the US too, and that can see, again, a lot more traditional players entering the market. Probably that will see volatility come lower, and again, that should add to that medium-term top side potential, which for me is Bitcoin up to 200,000 this year and $500,000 before Trump leaves office.
Bitcoin's journey to a $500,000 valuation isn't just wild speculation anymore, at least not according to some of the most influential voices in global finance. With Trump back in the White House, key policy reversals and a friendlier regulatory tone have major investment firms predicting a dramatic surge in Bitcoin's value. According to Standard Chartered, a confluence of institutional adoption, U.S. policy shifts, and global participation could launch the digital asset into a league of its own. But behind the optimistic projections lies a market grappling with volatility, hacks, and a still evolving regulatory environment.
So I think the Trump administration will be positive medium term. So we came into January 20 hoping for quite a lot, and you could argue there was already quite a lot of positivity priced in. The big change that we saw immediately was the removal of SAB 121, which had been hampering US financial institutions from entering the space. So that's a huge positive.
The dismantling of SAB 121 was a pivotal moment. This obscure but impactful regulation had long acted as a roadblock for U.S. banks looking to get involved in crypto custody and investment. Its removal signaled to Wall Street that the doors were officially open. Almost immediately, states began exploring ways to hold Bitcoin on their balance sheets, and even sovereign wealth funds from the Middle East started acquiring sizable positions in U.S.-based ETFs. That shift has turned Bitcoin from a fringe asset into a strategic holding for nation-states and institutions alike.
The stockpile for me is okay because it legitimizes other sovereigns, both within the US, so a number of US states are considering holding Bitcoin on balance sheet, and globally. So we have already started to see in the Middle East, the Abu Dhabi Sovereign Wealth Fund now owns 4.7 thousand Bitcoin equivalent of the largest IBIT ETF as well.
When sovereign wealth funds begin accumulating Bitcoin, it changes the entire perception of the asset. This isn't just retail traders hoping for a moonshot anymore. It's long-term, strategic capital setting up shop in the crypto space. The presence of heavyweight institutional players could not only legitimize the sector, but also smooth out its turbulent trading patterns over time. Yet even amid this optimism, recent events have served as a sobering reminder of the fragility still present in the crypto ecosystem.
So it's come at a very bad time. So we already had the Solana meme coin story around Libera a couple of weeks ago, obviously risk assets coming lower, and then you had the Bybit hack too. So within the crypto ecosystem, what we need are traditional financial players like Standard Chartered, like BlackRock and others that have the ETFs now to really step in size.
The Bybit hack and the unraveling of meme coins like Libra added fuel to a fire already ignited by broader sell-offs in the tech sector. As confidence shook, even high-performing crypto ETFs experienced billions in outflows. For newer investors who entered after Trump's re-election, the sudden drawdown felt brutal, and for many, it was enough to make them exit altogether. But for long-term holders and institutions, these moments of panic have only reinforced the need for mature market infrastructure.
So even in the last week, we've seen about $3 billion of outflows in terms of ETFs. So we got to a net position of about 40 billion of inflows over the first 12 months of those ETFs in the US, which quite frankly is the strongest ETF performance by any asset class in history. But in the last week or so, we've seen 3 billion of outflows.
What makes this moment so critical isn't just the turbulence, it's the fact that the institutional base is still only partially formed. Pension funds and sovereigns remain on the sidelines in significant numbers, meaning that once regulatory clarity firms up, a wave of capital could come pouring in. That's where the real bullish case lies. Not in speculative retail trading, but in massive, long horizon capital looking for a hedge against inflation, political instability, and traditional financial uncertainty.
And in the ETFs so far, we haven't really seen much of the very long-term pension funds in the US. So here I'm thinking state pension funds, etc., that are huge in size. They have $40 trillion worth of assets, and they only currently own 1% of all the ETFs in the US. So there's that very long-term sector that is still to participate. More regulatory clarity will help that.
So, where does that leave us? According to Standard Chartered, if regulatory efforts succeed and volatility subsides, the upside for Bitcoin is not just ambitious, it's structurally supported. With $200,000 predicted in the short term and $500,000 as a longer-term target during Trump's tenure, the potential is no longer just hype. It's being modeled by the same institutions that once viewed Bitcoin as speculative noise. If these forecasts hold, the next financial supercycle could be shaped as much by digital assets as by traditional ones.
We should get more regulatory clarity through the year this year, stablecoin regulation. We should get some KYC type regulations come through, which can help the industry as well. And that should further legitimize. So you'll see more US banks involved. You'll see larger institutions in the US continue to push through.
As Bitcoin weathers another wave of volatility, it's becoming clearer that its long-term trajectory may no longer be dictated solely by hype cycles or retail frenzy. What we've explored in this discussion points to something more calculated and structural. The Trump administration's rollback of restrictive policies like SAB 121 has opened the gates for deeper institutional involvement. From sovereign wealth funds to the potential entry of massive U.S. pension systems, we're seeing a quiet but powerful shift in who holds the keys to Bitcoin's future. Even amid hacks and panic-driven ETF sell-offs, the broader financial establishment appears to be preparing for a future where Bitcoin is not just tolerated, but strategically embraced. The real story here isn't just about price speculation. It's about how one of the world's most controversial assets is inching its way into the mainstream, helped along by government policy, institutional appetite, and a desire for alternatives to the old financial guard.
But medium term, yes, I think the diversification story is reasonable. The use case for Bitcoin in particular is diversify against risks around traditional financial markets, be it banks, so we saw that with the SVB collapse a couple of years ago, or around treasury markets. So if you saw a looser fiscal position in the US, something which looks less likely right now, then Bitcoin can help diversify against that.
Do you believe Bitcoin is on track to become the ultimate hedge against financial instability? Or is the $500,000 forecast just another ambitious prediction in a market known for its extremes? Let us know what you think in the comments. And as always, thanks for watching.